there seems to be this constant banking crisis, failing banks crisis going on that's just always looming around, and it pops up every few weeks apparently with a new bank that's collapsed. And obviously, we saw most recently First Republic, they went down, and JP Morgan is set to actually acquire them under some pretty favorable terms that JP Morgan gets to make a pretty good amount of money and then share the losses with the FDIC or the government, so they don't actually have to take on those losses. So it's a pretty stellar deal for JP Morgan. This is some of the breakdown of it here, of this person breakdown. And this is obviously a tweet. So I have to assume that he's run his own numbers and stuff, that they're at least close to accurate. But it says JP Morgan's making a killing on this deal, buying $18 billion in net assets at market by paying $10.6 billion. So an immediate $7.4 billion book profit. And also subsidized financing and loans, loss sharing on top, restructuring costs to be deducted from this. But thank you, U.S. government. Jamie Dimon celebrating right now because they get to make an instant about $7.5 billion just for buying this bank and share the losses with the government so that they don't actually have to take on the responsibility of the majority of the losses, or whatever their share is. So it's just a win-win deal for them. And also JP Morgan actually, I think, goes over like 10% of all deposits or something, where they have like $2.4 trillion in deposits. So this is a bank that's growing to astronomical levels that I don't think are supposed to be allowed, but for some reason, we're looking the other way for JP Morgan. Before these bank failures that we've seen, obviously, even if you adjust for inflation, you can see this here. 2008, we had all these banks. I think it was 25 banks. Yeah, 25 banks total for around this over $500 billion mark. And even just right now, with just the 3 banks that have gone down, we're already over 2008. We are already past that. For an inflation adjusted period, all these numbers are adjusted for inflation. So there's nothing, it's comparing apples to apples. And we're already worse off with just 3 banks down. And looking at the number of banks, right? This is just seeing the towering number of banks that collapsed in 2008, 9, 10, those like few years after the financial crisis. It's actually crazy to see that all of these banks that collapsed are about equal to what 3 banks have collapsed yet. So the bigger question is, have we seen what's worse to come, right? Has the worst passed us? Are we on the other side? Is there no financial crisis looming like some people are saying? Or is this just the beginning and we're going to see more banks fail? Because obviously the further you push rates up, the longer you keep rates higher, the more banks are probably going to end up failing. And the bank stocks show just that. You can see this is the next bank that people are looking at that's going to fail, saying PacWest Bancorp. Their stock trading was halted, citing volatility after sinking 30% today. So obviously this next bank is what everyone's looking at. It's nowhere near as big as First Republic or Silvergate or Silicon Valley, but it's still a bank, right? It still has a good amount of money. If we look at their stock, you can see down 27% today. If we look back up, you see it went from $29 a share down to $6. This is a $700 million bank now. Was definitely over in the multi-billions. Now it's down to where it is. Another bank that we're seeing, Western Alliance Bank, seen down 15%. You zoom out, you can see the cliff that it fell off from $80 high over here and then down to $30. So not as dramatic maybe as the other bank, but still a huge move for this bank. This is a $3 billion bank. Another one, Metropolitan, people are down 20% today off of all this kinds of news. A similar chart, right? I mean, straight down for the year, but even right before the cliff, $60 down to 21. That's not great. And Home Street, another bank, down bad today. Looking at the same chart, it's just straight down for the year. And even, what is this? Trading at $40 in the beginning of the year, around $30 before this real big tumble. $30 down to $6. That's not good. Those are some of the banks that are kind of reacting the most. I mean, every bank stock kind of took a hit, but those are some that kind of reacted the most from this. And I know PacWest, that's the bank that a lot of people are looking at next, saying that's the next bank to fall. So we'll see what happens there. But it does seem like this banking crisis is constantly going to be looming until either rate cuts come or the FDIC just comes out with the money printer. The government comes with their money printer and says, everything's back. There's nothing to worry about. Any trouble, there's going to be printing and the money is going to be taken care of. That's maybe the only way that they avoid this, and it's going to cause even more problems. And without that, we can see that every single bank is in trouble. There is not really a single bank outside maybe the big banks that are actually all right, because those banks, they can't do anything wrong, right? They do something, they start to collapse, the government's guaranteeing to bail them out. They're too big to fail. But if you see some of this stuff, the banks here, all banks are sitting on major securities losses. The big four banks have a combined $211.5 billion in unrealized losses. Bank of America alone is stomaching a third of it. Regionals are getting slaughtered due to their small deposit bases, but large banks have these holes too. Obviously, no bank is safe, right? All banks are struggling. Unrealized losses are catastrophic. For even this Bank of America's 108 billion in losses, JP Morgan's 36, Citigroup's 25, Wells Fargo's 41 billion. So the big question for a lot of people is, how long can they last at these rates, right? Without the rate cuts and stuff that to manipulate the money supply and push more money into the system. Can they last long enough to the point where they don't collapse, or are they going to break and then the government has to somehow bail everybody out yet again? And with the FOMC meeting coming up, the Fed most likely to hike the rate to 5.25%. So this is the peak of what the rates were 2005, 6-ish. And I mean, people are, I guess, comparing that, saying, maybe this could be the end, but also, I mean, right here could have been the end, right? But for the first time in a long, long time, decades, is the federal funds rates breaking this downtrend, right? It broke higher than what it was before, about to at least come even to where it was before. So, a lot of copium out there for this stuff where it's looking at these charts and saying, well, this was the top and this could happen, when I don't think the FDIC or the government or Jerome Powell or any of them really care. I don't think they are out here worrying about this, because they're just staring at inflation saying, we got to get this down at any means necessary. And you have the billionaires sitting there talking about how they desperately need to be listened to. See this David Sachs on his podcast talking about Elon Musk warnings that the Fed needs to cut rates, but they're going to raise rates, probably talking about, this move here could in hindsight be the straw that breaks the camel's back. But nobody really knows. The reality is nobody knows, right? Everybody's just saying this stuff, and obviously billionaires are really hurting. These huge money funds and people are really hurting because commercial real estate's coming up for due, and with no free money to go and get, it's going to be really hard to pay those things. So, the billionaires crying for this stuff to stop, they just must not be smart enough of what they're actually doing. But Elon Musk responded to this too, saying, Fed's making decisions using stale data. It's like driving a car while looking out the rear window. Fine when the road is straight, but destined to crash when the road is winding. And although that could make sense and obviously be something to pay attention to, and they could end up being right, it is very funny seeing billionaires who are always talking about how successful they are and great they're doing, and they build all this stuff, but when times get tough, all of a sudden they're not the same successful person that figured it out, and they need free money and rate cuts and bailouts. They just can't possibly be asked to go through this. I guess we'll see where all of this goes, right? More banks are probably going to collapse. A lot of smaller banks are probably in danger, and even the big banks are sitting on massive unrealized losses that, with a matter of time at these rates and stuff, probably will come back to haunt them, and something will happen, and we'll have to see another bailout yet again to kick the can down the road and support the bad businesses that these banks really are. That's gonna do it for this video. As always, don't forget to smash the like button and subscribe, and I'll see you guys in my next video.